Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Patrick Industries Inc. quarterly report. Patrick Industries Inc. provides a wide range of businesses and services across various markets. The company's offerings include manufacturing, component products for RVs, marine, powersports, manufactured housing, and industrial markets distribution, pre-finished wall and ceiling panels, drywall and finishing products, electronic components, appliances, and marine accessories, transportation, and logistics services. The company's manufacturing segment produces over 100 different product lines, including laminated products for furniture and cabinets, hardwood furniture and vinyl printing, solid surface, granite, and quartz countertop fabrication, aluminum and fiberglass products, flooring products, and dash panels. The distribution segment offers a variety of products, including wiring, electrical and plumbing products, fiber-reinforced polyester products, cement siding, and raw lumber interior, passage doors, and roofing materials. Patrick Industries Inc. has experienced a significant increase in its stock price over the past year, rising by 35.94%. This growth can be attributed to several key factors. The company's strong quarterly earnings reports have been a major contributor, with each quarter exceeding analyst expectations and demonstrating robust demand in the RV and manufactured housing markets. Strategic acquisitions have also played a crucial role in Patrick Industries' success. The acquisition of Sportech, LLC strengthened its powersports platform, while the Medallion Instrumentation Systems deal expanded its capabilities. Additionally, the RecPro acquisition significantly increased its presence in the outdoor enthusiast aftermarket. Furthermore, the company's capital allocation and shareholder value initiatives have positively impacted its stock price. An increase in quarterly cash dividend and share repurchase authorization demonstrated a commitment to returning value to shareholders. The 3-for-2 stock split made shares more accessible and influenced market sentiment favorably. Overall, Patrick Industries' combination of strong financial performance, strategic acquisitions, and capital allocation initiatives has driven its stock price growth over the past year. The primary drivers of revenue growth or decline for our company can be identified through various industry segments and strategic initiatives. Revenue growth is primarily driven by strong sales in key industries such as recreational vehicles, plus 7% in Q3, plus 9% in 9 million, marine industry, plus 11% in Q3, plus 2% in 9 million, powersports industry, plus 12% in Q3, flat in 9 million, and industrial market, plus 4% in Q3, plus 3% in 9 million. Additionally, strategic acquisitions such as RecPro have contributed to revenue growth. On the other hand, revenue decline is evident in the marine market, minus 1%, and manufactured housing, MH market, minus 5%. Furthermore, a decrease in operating income as a percentage of net sales from 8.1% to 6.8% suggests inefficiencies in operations that may be contributing to revenue decline. Net income and profit margins decline. The financial performance of the company has shown a decline in both net income and profit margins over the past year. In the third quarter Q3 of 2025, net income decreased to $35,303 from $40,866 in Q3 2024, while for the 9 months, 9 million period, it dropped to $105,977 from $123,843 in 9 million 2024. Profit margins also witnessed a decline. The gross profit margin fell to 22.6% in Q3 2025 from 23.1% in Q3 2024, while the operating income margin decreased to 6.8% in Q3 2025 from 8.1% in Q3 2024. The consistent decline in net income and profit margins across multiple periods indicates a decrease in profitability for the company. This trend suggests that the company needs to reassess its operations and strategies to improve its financial performance. The company's financial performance indicates a strong ability to generate cash from its core operations. With positive operating cash flow in both years, it demonstrates the company's efficiency and profitability. The net operating cash flow of $57,412 in 2025 further supports this conclusion, signifying that the company is capable of producing sufficient cash to meet its financial obligations. The company's debt level has remained relatively stable, with a slight increase from $1,332,000 $1,188 to $1,339,035 between December 31, 2024 and September 28, 2025. However, interest expenses have decreased significantly, with a net decrease of -8.7% in the first instance mentioned and further reductions in subsequent periods. In Q3 2025, interest expenses decreased by $1.6 million, 8%, compared to the same period in 2024, and for the year-to-date 2025, they decreased by $4.1 million, 7%, compared to 2024. Overall, while debt levels have remained steady, interest expenses have seen notable reductions. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company paid out $39,974 in 2023, with an increase to $37,071 in 2024. Additionally, the company engaged in significant share buyback activities, repurchasing 377,612 shares at an average price of $84.66, resulting in a total cost of $32 million. These actions reflect the company's strategy of allocating capital to enhance shareholder value. Concerns about inventory buildup and supply chain disruption. The financial summary highlights several areas of concern regarding inventory buildup and supply chain disruption. Notably, inventory levels have increased significantly across various product categories, including recreational vehicle, marine, powersports, manufactured housing, and industrial. Additionally, raw materials and finished goods inventories have also seen a rise. This increase in inventory is accompanied by rising warehouse and delivery expenses, which have jumped by 17% in Q3 2025 and 18% in YTD 2025. Furthermore, manufacturing segment sales have increased, potentially indicating inventory buildup. Decreased sales to the MH market in Q3 may also suggest supply chain disruption or decreased demand. The overall trend suggests that companies are facing challenges in managing their inventories and supply chains, which could have long-term implications for their financial performance. That concludes the financial summary for PATRICK Industries Inc. Feel free to comment below, and I will be happy to answer them when possible.